Hello everyone, I'm Parizad Sirwalla, Country Leader for Global Mobility Services Tax, KPMG in India. The last 2 years, people have witnessed a catastrophic time in terms of the pandemic. The economy is growing well at 9% plus, though the third wave has taken it back a little bit. It is natural for all constituencies to expect tax breaks, particularly at this time of the year as we look at Budget 2022. But it remains to be seen, with the government having diverted certain funds towards relief measures, to what extent tax breaks are introduced is something that we would have to wait and watch. Similar to every year, personal income tax collections this year were around 44% of the direct tax collections. Therefore, personal tax is an important element to be considered and evaluated at every time for the Government of India. In unprecedented times, particularly as the third wave surges, there is a huge amount of medical expenditure that almost every household has witnessed in the last 2 years. It is therefore hoped that there's some amount of deductions specifically carved out, maybe to the tune of 1 lakh per annum, for COVID-related medical treatment for self and family members. While last year in June 21, there was a press release introduced by the government to provide certain reliefs for amounts provided by employer to employee on medical treatment of COVID, it's not too clear whether benefits in kind, like the cost of vaccination that the employers have done, all corporates have provided to employees, there needs to be some amount of clarity around the cost of these vaccinations as not being taxable in the hands of the employees. 2 years, the name of the future of work has completely changed. We've all been working from our home offices. Many employers have provided reimbursements in the form of Wi-Fi charges incurred, electricity expenses incurred at your home. Some of us have bought ergonomic furniture. It would also be prudent for the government to come out with some clarity on these items of reimbursements, hopefully not being taxable in the hands of the individual. The salaried class is also expecting an increase in the standard deduction from 50,000 rupees per annum upwards, so that they get some tax savings there as well. In last year's budget, as we may recollect, there was an optional tax regime introduced. So there were 2 tax regimes which were brought about, the old one without any exemptions and with a flat, with the status quo as usual. But there was a new scheme where the tax rates were lowered. However, the popular exemptions like ATC, HRA, interest on loan was absolutely done away with. While we don't have the exact data, it appears that there were not many takers for this new tax regime. The objective was to move towards a clutter-free, simplified tax structure. Maybe there is a need to tweak that scheme a little bit so that you have people opting for and having more benefits. With travel having completely stopped, last but not the least, the leave travel concession scheme that the government had introduced in the absence of travel, if you spend on certain items where GST is paid, expired last year. That needs to be extended, hopefully to March 23 as well. Having said that, all in all, while the expectations will be galore from a personal tax standpoint, if the government could look at passing certain tax savings to individual taxpayers, having gone through what they've gone through in terms of spiraling medical costs, would be a welcome relief. Thank you.